Hello traders, Gary Wagner here. It is 12:20 in Honolulu, 6:20 in New York on Tuesday, 14th day of May, 2024, and this is the evening report for gold and silver. Gold gained over half of yesterday's decline of $32. In New York trading today, gold gained $16.90. That's a net gain of 0.72%, taking the most active June contract to $2,359.90. It is trading overseas. When combined with Globex trading, it is up $2.60 and currently fixed at $2,362.50. Spot gold gained $22.09, taking a troy ounce to $2,358.23. Silver gained 44.5 cents in trading today. That's a net gain of 1.57%, fixing July silver at $28.87. Currently, it is trading just about 1.5 cents lower, fixed at $28.85.5. And gains in both gold and silver were aided by dollar weakness today. The dollar is down 0.21%, taking the index to 105.027. As we spoke about yesterday, the dollar is at a very critical point because this level, 105.028, has been an area of resistance in April as well as February. It also was an area of support early on at the beginning of November, but when it did break through, it broke through with a vengeance. On this particular day, the dollar declined by 1.52%, a tremendous one-day decline. My feeling is that we could see dollar weakness continue, specifically if inflation ticks higher. And if that's the case, and we do get a break below 105 on a closing basis, we could see the dollar fall significantly. I believe at least to 104 and as low as 103 to 102.40. Most importantly, because gold and silver are both paired against the US dollar, dollar weakness would contribute strong tailwinds, moving both precious metals higher. Today's move was significant in that first, the low that came in, as well as the open, came in just at the 23.6% fib retracement. As we talked about over last week, that is a critical area for gold to hold if we expect the breakout that occurred late last week to continue and to overtake the decline of $32 that occurred yesterday. In fact, it looked like a very good buy signal. A couple of the traders here at the firm suggested that. My only reluctance was the wild volatility that we could see in tomorrow's CPI report. Had it not been for that important report being released tomorrow, I would have, in fact, issued a buy signal. We're currently trading at 23.62. We are just above the close in New York. And in terms of our projections, we talked about the fact that this breakout that we identified was a breakout from a bull flag. The way I'm looking at the current market scenario is that in terms of our Elliott wave count, we are certainly in a bull count with the beginning of the first wave occurring on the 6th day of October when gold was trading at approximately $1,828. From there, it moved to approximately $2,116, our wave one. We had a standard A, B, C through a compression triangle correction. We had a strong breakout on our wave three, taking gold from about 2,000 to the all-time record high. And following that, we began a correction. That correction, I believe, concluded at the bottom of this channel, completing our wave four, and we are now in a wave five. There are a couple of ways to forecast where this rally could conclude. One of the ways to do it is this breakout itself. By using this pole, we can clone that pole and then use that at the lowest trading value. According to this technique, we will see gold trade as high as 25.64 in the next 3 to 6 months. There is another way to do that, and that is to take our wave 3, measure that, and do a 61.8% Fibonacci extension. And interestingly enough, it comes in within dollars of what our projection is based upon measuring the distance moved during the pole of this bull flag formation. This is indicating that the fifth wave should take us to approximately $2,560. Again, that could occur within 3 to 6 months, considering that our wave 3 took approximately 3 months to run its course from about mid-February up to the first week of May. We will update our upside target depending on any big changes in the fundamental events that have had such a profound influence on the price of gold, the dollar being a key element, inflation, geopolitical concerns, as well as key government reports such as tomorrow's CPI, the PCE inflation index, and jobs report being the most critical of the government reports as it pertains to multiple financial markets, including the precious metals. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.